Welcome to today's video where I'm going to reveal the exact strategy for catching explosive market trends early, before the masses pile in and drive prices to heights most traders can only dream about. I'm talking about the difference between making modest returns and creating genuine wealth that can transform your financial future. Have you ever watched a stock climb 300% after you sold it for a quick 20% gain? That sinking feeling in your stomach, the realization that you just traded pennies. When dollars were on the table, it's a pain almost every investor has felt. But what if I told you this pattern isn't just bad luck? What if it's actually by design? You see, there's a fundamental truth about markets that Wall Street insiders understand, but rarely discuss openly. The real money, the life-altering wealth, isn't created through quick trades and small market fluctuations. It comes from identifying and riding massive, sustained price movements that carry assets far from their starting points. These aren't just ordinary price increases or routine market cycles. They're wealth-creating tsunamis for those who can spot them early and, this is crucial, have the discipline to stay with them when everyone else is jumping ship. Has this ever happened to you? You research a promising asset, buy in, and when it moves up 15 or 20%, you quickly sell to lock in profits. You feel smart, satisfied, until you watch that same asset continue climbing for weeks or months. Afterward, reaching heights that would have multiplied your initial investment many times over. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Stay with me until the end of this video, because what you're about to discover might completely transform how you approach the markets. Most traders are systematically trained to fail by focusing on exactly the wrong things. While the masses obsess over daily noise, the minute-by-minute fluctuations, the constant market chatter, the latest headlines, the real wealth builders are silently positioning themselves for explosive trends that actually create fortunes. The true enemy isn't market volatility or unpredictability. It's impatience, our hardwired human tendency to grab immediate gratification instead of waiting for truly significant rewards. This pattern destroys more trading accounts than any market crash ever could. The approach I'm about to share doesn't require complicated technical indicators or expensive software. It doesn't demand that you quit your day job to stare at charts all day. What it does require is something much rarer in today's fast-paced market environment: the ability to distinguish between meaningless market noise and genuine momentum that signals the beginning of something extraordinary. Imagine being able to look at a market and instantly recognize the difference between a temporary price bump and the beginning of a major trend. This isn't some mystical talent. It's a skill that can be developed through deliberate practice and the right mindset shift. The hidden truth behind successful trading is that distinguishing signal from noise becomes your greatest competitive advantage in a world where most investors are drowning in information overload. Behind the scenes of every explosive market move, there's a period where smart money quietly accumulates positions while the masses remain distracted by day-to-day fluctuations. These early signals are subtle. They don't announce themselves with flashing lights or breaking news alerts. They whisper rather than shout, revealing themselves only to those who've trained their perception to see what others miss. Now, I want to go even deeper into this topic by exploring the psychological transformation required to not just spot these trends, but to stay with them through their entire life cycle. You see, identifying a promising trend is merely the beginning of the journey. The real challenge, the one that separates average traders from truly exceptional ones, is having the conviction to stay with that trend once you've found it. Think about it. We've all experienced that moment of clarity when we recognize a potential opportunity. The research aligns, the technical signals confirm, and we make our move. But then something fascinating happens in our minds. The moment we have skin in the game, our psychology shifts dramatically. Each price fluctuation becomes personal. Each temporary pullback triggers our fight or flight response. And that's precisely when most traders make their fatal mistake. They exit too early. Not because the trend has changed, not because their original analysis was wrong, but simply because they lack the emotional resilience to ride the natural ebbs and flows that come with every significant market move. This psychological barrier creates a wealth gap that few ever cross. The path to substantial gains is never linear. It's filled with moments of doubt, with periods of stagnation, with frightening pullbacks that test your resolve. Yet those who embrace this reality, rather than fighting against it, discover a profound revelation. Uncertainty isn't your enemy. It's the very source of opportunity. When you develop both the perceptual clarity to identify meaningful trends and the emotional fortitude to stay with them, you enter a different league altogether. Your decisions become less reactive and more strategic. You begin to see market volatility not as something to fear, but as the natural rhythm of wealth creation playing out over time. If you want more insights on identifying explosive market trends like these, hit that subscribe button now. I'm constantly sharing strategies that most traders overlook until it's too late. The impact of this dual mastery, signal recognition and psychological resilience, extends far beyond individual trades. It reshapes your entire relationship with markets, transforming what most experience as a stressful, anxiety-provoking environment into a landscape rich with opportunity. If what I've shared so far resonates with your own trading experience, write "signal over noise" in the comments. I'm curious how many of you have already begun this journey of perceptual refinement. Let's talk about a revelation that completely shifted my perspective on market interaction. The market is always right, always. It doesn't care about your opinions, your hopes, or your fears. It moves according to its own internal dynamics, a complex interplay of countless forces that no single individual can fully control or predict. The traders who argue with the market, who insist that prices should move differently, are fighting a battle they cannot win. They're imposing their expectations onto a system that operates by its own rules. The watershed moment in my journey came when I flipped this perspective entirely. Instead of trying to bend the market to my will, I learned to align myself with its momentum. This isn't about surrendering your analysis or becoming passive. Quite the opposite. It's about developing the wisdom to recognize reality as it is, not as you wish it to be. When you see a clear trend developing, you position yourself alongside it rather than against it. You become like a surfer who understands that fighting the ocean's power is futile, but riding its waves can carry you further than you could ever go by swimming alone. The transformation this mindset creates cannot be overstated. Once you stop battling the market and start moving in harmony with it, trading becomes less stressful and more profitable. You conserve your mental and emotional energy for what truly matters. Identifying those explosive trends early and having the courage to stay with them. This journey of alignment leads to another profound revelation about market timing. For years, I was obsessed with buying at the absolute bottom and selling at the perfect top. I thought this was the hallmark of trading mastery. I couldn't have been more wrong. This perfectionist mindset is actually a gambler's approach, not an investor's strategy. When you're fixated on catching exact tops and bottoms, you're essentially trying to predict the unpredictable. You're playing a game of perfect timing in an imperfect world. And this pursuit of perfection becomes the very obstacle that prevents consistent profitability. The breakthrough moment in my development came when I embraced a fundamental truth. The real money isn't made at these elusive extremes. It's made in what I call the fat, juicy middle of a trend, that substantial portion where the direction is clear and the momentum is strong. Imagine a train leaving the station. At first it moves slowly, gathering momentum. Then it reaches cruising speed, moving powerfully and consistently. Eventually, it begins to slow as it approaches its destination. The genius strategy isn't trying to jump on while it's still at the platform, too risky, or waiting until it's nearly stopped, too late. The optimal entry is when the train is clearly moving in a defined direction, but still has most of its journey ahead. This middle portion of the move is where the risk-reward ratio tilts dramatically in your favor. Behind the scenes of every successful trade is this counterintuitive wisdom. You don't need to be perfect. You just need to be present for the most profitable part of the trend. If you've been struggling with trying to time perfect entries and exits, write middle path trader in the comments. I'd love to know how many of you are ready to focus on capturing the substantial middle rather than chasing the elusive extremes. This revelation about the middle path connects directly to another crucial mindset shift that transformed my trading journey, embracing calculated uncertainty. Many traders operate under a dangerous illusion that they can achieve complete certainty before taking action. They want guarantees. They want assurances. They want the market to promise them it's the right time to enter. But here's the uncomfortable truth. The market never provides such certainty. Ever. It offers hints, signals, and indications, but never promises. This is why decisive action in the face of calculated uncertainty becomes such a valuable skill in your personal evolution as a trader. The traders waiting for everything to be crystal clear often discover a painful lesson. By the time absolute clarity arrives, the most profitable portion of the move has already passed. Think of uncertainty not as an enemy to be eliminated, but as the very foundation of opportunity. Without uncertainty, there would be no mispriced assets, no divergent opinions, and, ultimately, no profit potential. Your edge comes not from eliminating uncertainty, but from becoming more comfortable operating within it than your competitors. The decision to embrace imperfection both in timing and in information represents a profound personal transformation. It shifts you from a mindset of prediction to one of adaptation, from rigidity to fluidity, from fear to strategic action. Now I want to explore another revelation that completely shifts how we view market participation. The framework I'm about to share might seem counterintuitive at first, but it's led to a profound realization for many traders. The biggest profits don't come from constant activity. They come from patience. We live in a culture that celebrates busyness, that equates action with progress. The trading world amplifies this misconception tenfold. We're bombarded with real-time data, breaking news, and platforms designed to make trading as frictionless as possible. The underlying message is clear. Trade more to make more, but behind the scenes of truly successful trading lies an uncomfortable truth. The most profitable periods often involve doing nothing at all. Once you've identified a powerful trend and positioned yourself correctly, your greatest edge becomes your ability to sit still while that trend develops. This patient inaction, this deliberate stillness, runs counter to our psychological wiring. The transformation happens when you realize that trading isn't about keeping busy. It's about being right and then having the discipline to let that rightness compound over time. Some of my most profitable trades weren't the result of clever entries or perfect timing. They came from simply refusing to exit positions that were working exactly as anticipated. Think about this. Have you ever sold a position for a quick 15% gain, only to watch it continue climbing to 50%, 100%, or more? That wasn't a failure of analysis. It was a failure of patience. The intellectual journey from understanding this concept to embodying it represents one of the most challenging aspects of trading psychology. If you've experienced the frustration of exiting a position too early only to watch it continue climbing without you, write "Patience pays" in the comments. I'm curious how many of you have already discovered the power of strategic inaction in your trading journey. Now I want to explore another revelation that completely reshapes how successful traders view market movement. Markets never move in straight lines. Never. They advance, pull back, then advance again in a natural rhythm that tests both bulls and bears alike. These fluctuations aren't random noise. They're intrinsic to how markets function. Every significant trend will experience periods of consolidation and correction that shake out the timid, punish the impatient, and test the conviction of even the most committed traders. The market seems almost designed to separate you from your positions before the biggest moves occur. This cyclical pattern isn't a bug in the system. It's a feature that creates the very opportunities we seek. Developing the discernment to distinguish between a healthy correction and an actual reversal becomes a crucial skill in your evolution as a trader. A correction is the market taking a breath within a continuing trend. A reversal is the market changing its mind about direction. They may look similar in their early stages, but they lead to dramatically different outcomes. Join our community of trend-focused traders by subscribing right now. I share these market insights exclusively with subscribers who understand that catching big waves creates more wealth than chasing daily ripples. Here's the hidden truth that changed my entire approach. Most traders exit during perfectly normal corrections, mistaking temporary weakness for trend failure. They react to price action without context. But price movements only gain meaning when viewed through the lens of overall trend structure. When you understand that pullbacks are not just normal, but necessary for healthy trend development, your entire relationship with market volatility transforms. Instead of fearing these retracements, you begin to anticipate them as natural pauses that ultimately strengthen the primary trend. This mindset shift doesn't happen overnight. It emerges through experience, through watching countless trends unfold, through the painful lessons of exiting too soon, and the rewarding lessons of holding through turbulence. This understanding of market rhythms connects directly to what may be the most transformative insight in my trading journey. For years, I believed that superior intelligence and analytical skills were the primary determinants of profitability. I studied complex indicators, devoured market theories, and built sophisticated analytical frameworks, all in service of making smarter trading decisions. Then came the revelation that completely reshaped my understanding. Emotional resilience matters far more than raw intellect in determining trading outcomes. This insight wasn't immediately obvious. It emerged slowly through painful lessons and honest self-reflection. During significant market movements, the greatest challenge isn't identifying the opportunity. It's maintaining your conviction when everything around you seems to be falling apart. It's holding steady when media headlines scream doom, when friends question your sanity, when your own internal voice whispers doubts. In these crucible moments, your intellectual prowess becomes almost irrelevant compared to your emotional fortitude. I've witnessed brilliant analysts, people with extraordinary minds and deep market understanding, fail spectacularly as traders, not because their analysis was flawed, but because they lacked the emotional resilience to act on that analysis when markets became volatile. The breakthrough happens when you realize that it's not your brain that makes you money in the markets, it's your stomach, your nerve. If you found yourself making analytically sound decisions, but struggling to maintain emotional equilibrium when markets get volatile, write resilience over intelligence in the comments. I'm curious how many of you have recognized this crucial dimension of trading success. This realization about emotional resilience leads us to what may be the most liberating insight in my entire trading journey. You don't need to be right on every trade to be extraordinarily successful. In fact, here's the counterintuitive truth. You can be wrong more often than you're right and still generate substantial profits if you structure your approach correctly. The hidden mechanism behind this paradoxical outcome is maintaining favorable risk-reward ratios. When you keep your losses small and allow your winners to run significantly, the mathematics of trading shift dramatically in your favor. Even with a modest 50% accuracy rate, you can build remarkable wealth if your winning trades generate substantially larger profits than your losing trades cost. This insight catalyzes a powerful transformation in your trading psychology. Rather than obsessing over being right on every trade, you focus on the quality of your decision-making process. You become less attached to individual outcomes and more committed to maintaining favorable risk-reward dynamics across your entire portfolio. Behind the scenes, this approach creates a psychological freedom that paradoxically improves performance. When you know a single loss can't significantly damage your capital, when you understand that your methodology doesn't require perfection to succeed, you trade with greater clarity and conviction. The pressure to be right diminishes, allowing your analytical capabilities to function optimally. This framework for approaching markets brings us to another profound insight that completely reframed my understanding of how explosive trends develop. They don't appear randomly. They evolve from underlying conditions that gradually manifest in price action if you know what to look for. Think of markets as having their own language, a complex, nuanced dialogue that most participants never truly learn to interpret. Behind every price movement is a story being told about accumulation, distribution, supply, demand, and the subtle transfer of assets from weak hands to strong ones. The revelation comes when you realize this language can be learned, interpreted, and acted upon before the obvious moves occur. I spent years watching price action, not just trading it, but studying it like an anthropologist might observe a foreign culture. I wanted to understand the patterns, the rhythms, the hidden signals that telegraph major moves before they become apparent to the average participant. Consider how institutional money moves into a position. It doesn't happen all at once. That would immediately drive prices higher, working against their own interests. Instead, these sophisticated players accumulate positions gradually, often using pullbacks as opportunities to add to their holdings. This creates distinctive footprints in price action, periods of accumulation, subtle changes in volume patterns, tests of support that hold despite bearish news. The transformation in your trading results begins when you shift from reacting to completed moves to recognizing the early stages of emerging trends. It's like learning to identify a storm forming on the horizon rather than waiting until it's directly overhead. If you've begun noticing these subtle market patterns and want to develop your ability to read market language more fluently, write "market whisperer" in the comments. I'm fascinated to connect with others who are developing this crucial skill of recognizing what the market is telling us before the masses catch on. This ability to read market language connects directly to what may be the most overlooked aspect of trading. Success, the power of pre-planning your decisions. The hidden truth behind most trading failures isn't poor analysis. It's poor execution resulting from emotional decision-making in the heat of the moment. Markets are designed to trigger emotional responses. The volatility, uncertainty, and constant flow of conflicting information create the perfect conditions for psychological reactivity rather than strategic thinking. Without a predetermined plan, you become vulnerable to these emotional currents, making decisions based on momentary feelings rather than sound strategy. The paradigm shift occurs when you recognize that successful trading isn't about reacting in the moment. It's about planning in advance. Before entering any position, you must know exactly how you'll respond if things go right, if things go wrong, or if the market simply moves sideways. This isn't just about setting stop losses and profit targets. It's about mapping out your entire decision tree. This methodical approach creates a psychological buffer between market events and your responses, rather than asking, "What should I do now?" In the heat of the moment, you simply execute the plan you created when you were thinking clearly. This discipline transforms your trading from a series of emotional reactions into a structured implementation of strategic decisions. The journey toward this level of preparation illuminates another dimension of market mastery, one that dramatically changed my perspective. On opportunity, there's a fundamental truth that separates consistently profitable traders from the perpetually struggling. The most significant profits don't come from following trends. They come from positioning yourself ahead of the crowd. Consider this revelation. By the time a trend becomes obvious to most market participants, the most lucrative portion of the move has already occurred. The masses only recognize opportunities after they've been substantially developed, when the headlines are blaring, when the story is already being told. But at this point, the risk-reward equation has shifted dramatically. This insight sparked a profound transformation in my approach. Instead of waiting for confirmation from the majority, I began developing the courage to act on my own analysis, especially when it diverged from popular opinion. This path of independent thinking isn't easy. It requires intellectual honesty, conviction, and the resilience to stand apart from the herd. Behind the scenes of every significant market move is this undeniable pattern. Smart money accumulates positions early, the trend develops gradually, and only then does public awareness explode. By positioning yourself alongside the early subtle signals before widespread recognition, you enjoy both better entries and the psychological advantage of riding the wave of later participants. The awakening moment comes when you realize that consensus is rarely profitable. The crowd's enthusiasm is often a lagging indicator, not a leading one. The newspaper headlines, the trending social media topics, the taxi driver offering stock tips, these are usually signals of a trend's maturation, not its inception. If you've noticed how the most profitable opportunities often come from positions that initially felt uncomfortable or contrarian, write "ahead of the crowd" in the comments. I'm curious how many of you have experienced the power of positioning before widespread recognition. This journey toward positioning ahead of the crowd leads us to what may be the most profound revelation I've discovered in my trading career. The greatest obstacle to your success isn't the market, it's yourself. Your own emotional reactions, fears, greed, impatience, and overconfidence create more losses than market conditions ever could. This insight launches you on an unexpected journey of self-discovery. Trading becomes a mirror reflecting back your deepest psychological patterns, revealing how you respond to uncertainty, risk, and opportunity. The market doesn't cause your emotional reactions, it simply exposes them. The watershed moment arrives when you shift your focus from external factors to internal mastery. You recognize that no trading system, no matter how sophisticated, can overcome poor emotional regulation. No technical analysis, regardless of its complexity, can compensate for impulsive decision-making. The decisive battlefield isn't on the charts. It's in your mind. This realization catalyzes a profound shift in how you approach trading development. Instead of exclusively pursuing market knowledge, you deliberately cultivate self-awareness, emotional regulation, and disciplined decision-making. You begin to notice your psychological triggers, the patterns of thought that lead to poor trading decisions, and develop strategies to interrupt them before they hijack your results. The true evolution of a trader happens not just in understanding markets, but in understanding yourself. Your journey becomes one of developing the internal governance to execute your strategy, regardless of emotional turbulence. Now, I want to explore a powerful principle that completely reframed my approach to market success. Focus on being right big when you are right, rather than trying to be right on every trade. Most traders operate under a fundamental misunderstanding. They believe profitability comes from a high percentage of winning trades. This pursuit of perfectionism creates a cascade of destructive behaviors, overtrading, premature exits, and the constant anxiety of trying to avoid any loss. Behind this mindset lies a devastating mathematical blind spot. The revelation that changed everything for me was understanding that trading success isn't about frequency, it's about magnitude. It's not how often you're right, it's how much you make when you're right versus how little you lose when you're wrong. This paradigm shift transforms your entire decision-making framework. Consider this. Even the most legendary market operators throughout history rarely maintained win rates above 50%. What distinguished them wasn't accuracy. It was their ability to capitalize fully on their best insights while keeping losses small on their mistakes. They understood the profound truth that one great trade can compensate for dozens of small losses. This insight catalyzes a complete identity transformation as a trader. Instead of spreading yourself thin, trying to catch every move, you focus your energy, attention, and capital on the highest conviction opportunities. You become more selective, more patient, and paradoxically, more profitable. If you've begun to recognize that your own psychology might be the biggest factor limiting your trading results, write "inner mastery" in the comments. I'm curious how many of you have had this same realization on your market journey. The framework I've shared with you today isn't just theoretical. It's the distillation of hard-won wisdom that transformed my own trading journey from frustration to consistency. Learning to identify and ride explosive trends while developing the emotional resilience to stay with them has been the single most powerful shift in my approach to markets. What I find most fascinating is how these principles extend beyond trading into other areas of life. The ability to distinguish signal from noise, to act with conviction when opportunity presents itself, to maintain patience when everything around you screams for action. These are universal skills that create extraordinary results in any endeavor. I've created this channel specifically for people like you. Thoughtful individuals who understand that real success comes not from shortcuts or hacks, but from developing genuine mastery. Each week I break down these transformative concepts into practical frameworks you can implement immediately in your own trading and investing journey. If you found value in today's exploration, hit the subscribe button so we can continue this journey together. The community we're building here is focused on substance over noise, on meaningful insight over superficial tactics. I'd love to hear your thoughts in the comments, especially if this message resonated with you. Just drop "waves changed everything" in the comments if you're committed to focusing on the significant trends rather than daily noise. And if you connected with these ideas, giving the video a like helps others discover this approach too. It's a small action that amplifies our collective wisdom. There's a video right here that explores how to maintain emotional discipline during market volatility, the perfect companion to today's discussion about identifying trends. Click and continue with me over there to discover how these principles work together to create a complete trading framework. Until next time, focus on the waves, not the ripples. The real opportunities are hiding in plain sight.